Forces has announced that a flying disc has been found and is now in the possession of the Army.
CBR Street Gang, this is all by standing by, over.
All right, let's get the music under control here and do a little microphone check before we get rolling even. And let me know if you can hear me in the various chats here, including YouTube. And then we'll get started. All right, it seems as though everyone can hear me okay. And I'm just going to check on my monitor as well here. So I hear a little bit of me twice here. All right, it seems as though everyone can. There it is. All right, cool. Let's get this rolling. Hello and welcome to Landy's Crypto Corner. Today is our Friday live stream where we do some Friday analysis to wrap up the week for, well, CME and traditional markets, and then talk about the weekly closure for Bitcoin coming up here on Sunday. And today we're going to explore the topic that is a very hot and contentious one, which is, is the Bitcoin low really in? What are the downside risks? Is the reckoning still on its way for crypto, overall? Or have we already seen the major lows that could potentially become macro lows in? Now, we are going to start off by looking at some lower term time frame price action here on Bitcoin. And, I've got a few extra bells and whistles on this indicator that I can turn off. This is the Landy Bands indicator, and we don't really need the EMA break above or below. And we could probably turn off Super Trend. Where did I put that? There it is. Super Trend up and down. We can turn off. We might as well get rid of the bands for right now. And we're going to revisit what we've been talking about over the past, 4 or 5 live streams, maybe more, when it comes to volume-based continuation and swing fail patterns. This is just a method for kind of deconstructing the areas of interest in the order book based on volume on a particular directional move. In this case, it was to the downside. Using the 15-minute chart. You can use any chart when doing this, any time frame rather when doing this. I'm using the Bitcoin spot price chart to basically define the volume-based candles on the way down. This is the higher volume candles from the rejection at the high, and then the breakdown below. And the yellow is the 15-minute closes, the white are the wicks. And basically we're looking at high volume candles and then marking them. If they have continuation with no bounce, we're just marking the wick. If they have a bounce, then we're marking the close and the wick low. And that's going to be of the highest volume moves down. And then on any mean reversion, we are marking, we don't have to mark any of the higher volume candles up on the base chart here when tracking this volume. But when we do see any kind of break above that 27,560 or 576 rather up here, that's when we can then adjust, as we will have a bit of a trend change on the higher term time frames there, maybe a higher low or something like that, if that is put in, if Bitcoin can hold itself together here. So the big areas that I am tracking and do mark out when we are in between some of these levels are going to be the higher volume areas on any kind of retracement. So when we're hitting that resistance overhead at that 27.5 area, for instance, which is still the volume-based candles from the move down. So this was all just mean reversion. What we're going to do then is we can temporarily mark, and the way I have done this in the past is using a trend line, just hitting shift and then drawing the line across, and then there we go, it's in teal. And then we can say, okay, this was an interesting high volume move within the overall volume structure of the downtrend. And when that breaks down, of course, we got the move down to those other areas. So what we can do that is a little bit different than that, though, is we can actually take the price note tool here, and we can say, okay, this low right here was an interesting one when this one was put in. If it broke down, we're going to get continuation down and just track level by level, and this will give you that number right there as well. We can also do the same for the higher volume areas of interest on the downside. So this was the larger wick low candle here, and that is of the current move. So those are going to be my particular areas of interest that I'm looking out for to break out from this little bit of a consolidation. Of course, we still have to be cognizant of that historical high volume candle wick low here at 26,465. This guy right here that's also kind of governing this little bit of a tighter consolidation range at 26,650 or so. And then right there where we had this higher volume spike low before the lower highs continued, and then we got the breakdown on this subsequent candle that sent things down to the next level, and then so on and so forth. We can mark that, but it's also right in line with our 26,787. I typically just would refer to this as 26.8 anyway, so it's not necessarily needed, but I did want to show you that you can call that out with a price note if you'd like. And I don't change, by the way, this structure, or this chart that was created from the move down. I don't change this at all until we actually see a breakout above, in this case, that wick high. Anything else that I draw in this chart in relation to areas of interest for volume are simply going to be temporary notes. And it works out very well. And, we can kind of cover that, we had previously said, once we see 26,900 break, here on a close, it did so on this candle. Then we're looking generally up to 27,405. We saw that it did head there, came down, tried to find support on this candle, broke down to some of these lower levels, consolidated for a little bit, broke out again, shot right back up to that area, and then comes back down, found support on it, gave it another drive, consolidated, and then we had the breakdown from that 26.9 to around 27.5 or so. It's more like 27,450 if you're going to take the aggregate highs up there. And so far, Bitcoin really hasn't done much that we haven't talked about. So just to kind of review yesterday's and the prior day's Bitcoin in 60 seconds video, or videos, I should say. What we were generally looking for was if Bitcoin could close above and recover that monthly, then I was looking for, another run at the daily up here at 27.5. And you may remember that I had said prior to breaking out above the weekly here at 26,750 that we were likely to see the move head up into that monthly at 27.2 and throw a wick at that daily resistance overhead at 27.5. We got exactly that, and we did not see any closures. If we saw closures above there and or price action that traded above that 27.5 and then subsequently closed above there, I would have been looking for expansion further up to the weekly here at 28K and the dailies above at 28.46. And then we could, of course, whenever this does eventually happen, march that up to this daily low over here on a close at around 29,000 and then 29,004 so on and so forth. Now, to the downside, we've gotten the pullback as well that I was talking about. I had mentioned to look for pullbacks to around this wick low at 26.4. Of course, it did dip below there, but it did not close to around this wick low at, the close open around 26.2 to the wick low at around 26.1 by the basis band. So split the difference, just call it 26.2. Below there, I would be looking for the weekly to get ran here at 26K to the lower first, which right now is at 25,750. Give it a little room. If Bitcoin did head down there, you're probably going to see that adjust down, especially on any kind of a fast move, to somewhere around 25.7 rather. I believe I should have said 25,750, and it would be around 25,700 if we saw a fast move through the basis and the weekly down there. Now, of course, this will adjust later today, especially if Bitcoin is right around that basis, you know, a little bit closer to this weekly, probably somewhere around 25.8 to 25.9. If we did see price action below there, I would be looking for the wick lows to get ran around 25.5 to the lower second at 25.3, and possibly below again into that daily support at 25.1 to 24.8. And as I've been saying the entire time, if that is lost, I would be looking down to this weekly here at 24.3 to 24.5, kind of give it some room there, a little bit of a range, and that would then open up possible expansion down to the next weekly here at 23.7 to 24K. And of course, the line in the sand for the bulls here is 23.3 at this monthly. And if that area was lost at the monthly, I would be looking in the very low $20,000 region. So anywhere between, you know, your 20,000 to 21.5, 22K area. But that is, you know, not a guarantee. That would change the macro picture, especially on the monthly, and likely lead to the major low getting tested. So that's where we would then start even entertaining lower prices that test that major low at 15.5 to 18.5 or so. But for right now, you know, not much has changed on the macro. This, if you were to zoom out on the daily, and we can get rid of the volume here, and we can get rid of our volume-based candles that we track for continuation and swing fails. And if we just look at the, get rid of those price notes as well, at the structure here, what you'll note is that if we were to look back in time, there is, there is a case to be made that, you know, we could be seeing something like what we saw back here, that then would lead to, you know, where, you know, if you were to do bar projections, in this case, there's a few different ways to do it. You know, you can do bar patterns and try to do projections. You know, there's one of two ways that you could look at it. Right here could end up looking like a Wyckoff accumulation, which would be very similar to what we saw on the lows here prior to the new high, all-time high there. Or you could take the structure as a whole and look at this as this right here could be redistribution, much like what we saw over here, right? So we had a little bit of a breakdown. The big thing that I would tell you is, without breaking this prior low at around 24,750 on the wick low, around 24.8 generally across different exchanges, I would not be looking at this as a distribution just yet. And there's a few reasons why. So, you know, the danger is that when looking at the monthly here and turning on bull bands again, we can see that Bitcoin is still, well, you know, the monthly still has the downward facing basis band here. So that is, you know, telling us that from the monthly time frame that there is still risk on until we see closures above, we see this flatten out and or get an upward facing slope to it. But the risk from being below the basis band and then losing the wick low at 24,750 would be coming back down and testing this wick low around the lower first at the mid $19,000 area and possibly even lower. And if it went lower, then we're looking at the high side of the major low down here at around 18.5 to the actual wick lows, the next big targets. You could take some of the closes down here, you know, just below the lower first as wick catching areas in the, you know, low $19,000, upper $18,000 area. But realistically, we're looking at closes. We're looking at around 17,000 to the wick low at 15.5 or so, 15,460 in this case. And this is this would not be abnormal, especially if markets really start to fall apart. This would then start to paint the picture, especially from the Stoke point of view, that Bitcoin would look a lot like, it would look a lot like it's rejecting rather from the same area that we saw the rejection in 2019. Now, of course, this came down to momentum, created a higher low, and the macro, thus confirming the bear market bottom of 2018, then was confirmed in 2020. And it would take some time to play out, but this is what bulls need to pay attention to on the monthly here. And this is the 22,230 pivot. This is going to update, and I expect it to be, 23.3 to 24.3, which is, again, that's the major areas that we have talked about to the downside. This is the potential risk to the downside, and that's these weeklies down here in this monthly at 23.3, because that momentum pivot is going to update at the end of the month, and rise again, especially of course if Bitcoin doesn't fall through 22,230 by the end of the month. So this is where bulls need to quote unquote crap or get off the pot. And can they turn this into just a sideways market? Absolutely. But as momentum really slows down and stalls, and we see that there is a technical high and a close, and a real solidified high would come on any close below 24,750, then we would have that high, and we would be looking much, much lower, right? So that's the risk for the bulls, but it's not all bad. We are going to get a quarterly close, and I will tell you that the basis is right there at $23,000. So if we did see a wick in there, and not a closure, by the way, but a wick in there, I wouldn't be looking at this as inherently a bad thing. I would look at it as a very good opportunity to accumulate, not financial advice. If those of you like to accumulate, definitely good trades to be had to the downside should that happen as well. And we are going to see this basis rise. So I will be looking for this quarterly basis to tick up. It's been going about, where were we right here? So we were about 22,000, go figure, 22,000, 21.9 area. And it got raised by about $1,000 to around that $23,000. So I'd expect this to be around, $23,000 to $24,000, right in those same areas. So that is going to be the very, very interesting part to track coming into this monthly and quarterly close. So, and probably very interesting coming into the end of the year as we are in the fourth quarter tracking for the first quarter of next year. Now, there's also a lot of events that could happen between now and then. Of course, there is the ETF stuff, and if it is approved before the end of the year, that would probably be a surprise to the market, and we'd probably see some pretty crazy upside price action. But in this case, I do want to call out on the weekly that there is the potential here by the end of the week, and especially if Bitcoin can close above the wick high of last week, which is at 26,900, we'll call it. It's 26,892 here on spot price. But if Bitcoin can close the weekly candle above there, I would be generally looking for another run back up to the basis at around, it's currently at 27,900 or so. But realistically, we're looking at the close opens on the daily here at around this 27.7, so getting above this 27.5 wick high. Then we got the close opens at 27.7, and I would be looking for generally favorable towards upside near this wick at around 28 to 28.2 or so. Now, of course, that's been well covered within our Bitcoin in 60 seconds videos. Again, if you're not catching those, you can always turn on notifications and or head right to the Landy's Crypto Corner YouTube page, the main page under the Shorts tab. Now, let me actually get this under control and or just get rid of it. And let's look at this weekly again, because the weekly is also in a position where we could start to see a Stoke turn. And this would start to look a little bit more like a momentum reset within this range if it can hold the lows. Now, the current momentum pivot is at 23 or 27.3. And this area has been tested, to be fair. So this momentum pivot was just tested recently on this last move up to around 27.5. Now, that does mean that this may not adjust as harshly to the downside as one might expect as well. But in general, I would still be looking for this momentum pivot number to fall somewhere in the upper $26,000 area to $27,000. So that would give Bitcoin the chance to, in the subsequent weekly close, of course, not this Sunday, unless it can close above 27.3, but then the next Sunday or following Sunday, coming into the end of the month, that Bitcoin could possibly close a candle above that momentum pivot, thus getting an initial cross to the upside. And we also already have an initial cross to the upside on Bitcoin's 5-day, and this is closing today. So this, of course, we talked quite a bit about in Wednesday's live stream, Market Madness. And this is, it's not, the low is not there yet, just so you know. So even if we do see a momentum cross to the upside, it's still a building signal. And, Bitcoin right now is in that mean reversion phase. So BBWP is under the moving average. We are mean reverting from the below the lower first and right around that lower second area. And I would be looking for this to head back up to the basis. Again, that's in the same general area as this last wick high around 28.2. So that falls in our weekly zone at 28K and that daily zone above at 28.4 to 6. And this is going to be the interesting part coming into next week because we will have let me just double check. We will have the 5-day closing today. We will then have 1, 2, 3, 4, 5, a Wednesday into Thursday closure. And the weekly, of course, is going to be closing after the monthly and quarterly close open. So, I guess it's closing right on it. It's going to be closing on the 1st. So it is going to be after, as you'll see the monthly and quarterly close on the 30th. And then Sunday is the 1st. So the 5-day is going to be the edge, in my opinion, that we can look at as the criteria would be if Bitcoin can hold the lows. If Bitcoin can hold the lows, the 5-day turns, and the Bitcoin can hold the lows through the weekly of next week, not just this weekend, but next weekend, then we have the potential to see a possible cross of that Stoke momentum on the weekly to the upside. Now, keep in mind, even though it would cross to the upside, still fighting that 2-week, which is headed down, that 3-week, which is headed down, and that 4-week, which is headed up still. So I guess it's just the time frames between the underneath the monthly. We've got the 4-week, we've got the 3-week, and the 2-week, and that weekly there that could potentially turn back up. And that's where we can possibly see something like on a low being set, Bitcoin on the daily pulling one of these moves, coming down and then resetting on momentum for the daily. And another point in the bull's court that if the lows are held, in my opinion, would be the 2-day, which is currently pivoted at that very important 25,700 area here. Helps if I actually grab the right tool here. That is, of course, right around the lower first. And if the lower first is lost, then the 2-day is going to turn. And that's where I just previously said, if Bitcoin loses that lower first, I'm looking for 25.5 to the lower second and possibly a retest to that daily support down there where the lows came in. And the close coming in just above that daily support. So big ups on all of us here for picking out those levels. And yes, I'm all for patting ourselves on the back. We've been nailing it right along. For those of you that have based a lot of your analysis on what I've taught you, you've been giving me a lot of things that you're seeing, and of course, I always integrate that into the charts as well. If you see something that I don't, so always feel free to give me feedback if you catch something on the chart or there's something interesting going on that I didn't necessarily look at just yet. So keep that in mind. The 3-day also pointed up above 25,480, so basically 25.5, and the 4-day there at 25,350 or so. So if we can see a 5-day turn, Bitcoin holds the lows, especially above somewhere around that 25,780 region to 26K. And then we subsequently see the weekly get down there and start to get an initial cross. We could be looking at a rally coming into October, right? Early part of October, mid-October or so. Now, that's not a guarantee because Bitcoin is flirting with disaster right now on some of these medium-term timeframes. The 12-hour is still going to be headed down on any closures below 27,233. Of course, we are going to be coming into weekend price action. So if Bitcoin doesn't break down and just go sideways over the weekend, we could see a bullish reset on this. 8 hours is still going to be headed down on any closures below $27,000. The 6 hours probably getting close to turning. 26,650, which has been tested a little bit here throughout the early part of today. That 4 hour should be turning up, and it is. Not the strongest of signals, 26,540. I believe Bitcoin's trading right around there. And that hourly is probably the reason why, yes, it is. And that's because the hourly here is headed down on any closures below 26,632 at this particular moment. Now, the 15-minute very short-term time frames is trying to cross back up right now at 26,560 or so. So tight range. These numbers can flip-flop around within the range. I wouldn't put too much emphasis on the momentum pivots on some of these lower-term time frames. I would be using the volume-based continuation and reversal areas. So, and in this case, the easiest ones for the local here are just going to be the two price notes that I pointed out. It really is just this simple. Below, and this is just a general guideline. So not saying that below a certain level, everything's, it's over, everything's, screwed, or above, everything's great. But generally below this high volume wick low, it's going to test lower. It's probably going to swing this next candle wick low and lower. And above this particular low, if that is reclaimed, then I would expect Bitcoin to try higher. That doesn't mean that it's going to close higher, but I would be looking for it to try higher, even if it turns into a wick. And a good example of this is even locally, you can see that if you were just marking every single high volume candle, there was a high volume candle here. We did see a wick and a close above, but it did try above once it got to that level right here. And we had another high volume down candle here, and we can see that it's tried in and around those areas, but they're not what is defining this current range. And especially this tighter range, there is a lot of lower volume that is controlling this tighter range, but I'd be looking for, generally testing down further below this 26,382 and above 26,800. And, that is generally what we're seeing on some of those higher term time frame pivots anyway, above something like a 15-minute. So, all right, let's go ahead and I think that's just about everything I wanted to talk about for right now. The one thing I will point out here is let's go ahead and look at RSI actually. Let's go ahead and get RSI up here. So we are seeing Bitcoin play out a little bit of bearish divergence here. This is a hidden bear div. Bitcoin making higher highs on RSI, lower highs on the close. Then we have a bear div. So, and in this case, it's a hidden bear div because it is not in the current trend. We saw the trend reversal on lower lows, and this is basically trying to reverse that trend. So when looking at, what we have here on our charts, we have the downtrend, last lower high, lower low, trend break. Now we need to see a higher low, basically. And realistically, below the areas that I talked about at 26.4 to 26.2 at the basis, basically breaking down from this candle here, you really need to see higher lows coming in around that 25.7, or the 2 days going to get an initial cross down indicating that the lows are going to get tested again, or it's more likely, I should say, that the lows will get tested again. So that is about it. I'd still be favoring a move for higher lows here, and then come back to it, especially if things start to go really sideways over the weekend here. We'll see what happens after traditional markets close. If any whales in the market would like to take advantage of the lowered liquidity for either a downside or upside move, or if it's just going to kind of be quiet and be absolutely boring over the weekend. Coming into, of course, Sunday, which has been actually pretty fun at the CME Opens on Sundays. All right, let's go ahead and take a look at traditional markets because, a lot of Bitcoin's pullback was predicated on it kind of, really running out its momentum, going from one side of the Bollinger Bands here at the lower second to the upper second without getting consistent closures above and expansion. So momentum, slowed down and then turned on the daily for Stoke. In this case, we can come back and revisit some of the areas that we talked about with traditional markets. And, we saw the breakdown below that ever important 34,464 and the lower first, even a nice gap down into that lower second and below this wick low, at least swinging this wick low. Now, if this area does get closed below, then I'm favoring a move down to somewhere around 33,800 even, to, somewhere around 33,600, somewhere in there between this high and this wick low, as there is also a closing low over here as well. And in that case, I would actually favor a little bit more downside, or at least at minimum more sideways price action on Bitcoin. And in this case, traditional markets closing well below the pivot at 540 rather, here at 34,000. A little less than 500 points down from that pivot, but it isn't a critical area. And I did note to you guys that I did feel as though this was more of a range setup, but a closure below the lower second will get expansion to the downside. We do see that it is confirmed expansion. And, it's coming off some pretty low levels when we're looking at expansion in this case. So I would be, I'd be favoring more downside, quite honestly. The counterpoint to that would be if we see, which it's not going to be the 2 day, 3 days still down, 4 days should be down, 5 days should be down. Weekly, that's what I'm looking for. Yeah. So I would still be favoring downside. There is no real saving grace for this. Somewhere around, maybe even that, 33.6, 33.7, 33.8 area, around that lower first standard deviation on the weekly, and then see what happens. This is still pretty heavily downside angled. 35,000's that weekly momentum pivot. Of course, that's also going to be the 5 day, and the 4 days, a little bit tighter. So if it's going to bounce from like a 4 day perspective, then we need to see 4 day closures consistently above that lower first. This of course would carry things through the end of the month. We're seeing lower first breach on the 3-day. So that does bring into play that 2-day, which is at 33.8. So we have confluence with the support resistance areas that were just talked about. It is right on the edge of the lower second. So I would not necessarily call it like a doom shot just yet. It could bounce and reverse from here, especially on the lower term timeframes, but this is going to be consistent pressure down, being below that lower first standard deviation, whereas it was previously above. This is going to close today and get further expansion down. Lower second is right now at 33.9. I would expect this to move to somewhere, 33.950. I'd expect it to move somewhere around 33.9 to 33.850. We're seeing a little bit of a different look. This isn't ready to expand just yet for BBWP, but being below the lower first and the lower second, not good. It's got maybe a tick or two. So that does bring it into the early part of next week. It's either going to get continuation or try to bounce, is basically what I'm trying to say there. And, the momentum pivot is not far off for traditional markets. So the way that I would be gauging this is back above today's wick high, which is at 34,156. If that were to be reclaimed above the upper second, that starts to put the kibosh on this BBWP advancing aggressively. And I wouldn't necessarily be looking for a reversal, but I would be looking for tests up to try for a reversal around the lower first in that 34,350 zone. But I will tell you right now, this looks like it wants to continue down. The 12-hour might be painting a bit of a different picture. It is not 8-hour. Any hopium for the bulls? Nope. And it's getting expansion. 6-hour. Are you ready? Nope. No. And it's getting really nice lift off here. 4-hour. It's all over. Still turned down. Let's go. Maybe we can go really low time frame and hope for a bounce. Nope. 3 hours said no. 2 hours not ready yet. Look at that. The hourly. Look at the hourly starting to turn. There's the bull hopium. You got a 1-hour chart in your corner, bulls. Go ahead and really take control on Monday and see what happens. Most likely a bearish bounce until we see at least the 4 hours close and reverse on momentum and put in a low. So that would favor further downside here on Dow. NASDAQ bouncing right in that area that we had previously spoken about. It has not lost the support just yet. It did briefly in a close yesterday. It's trading right on the 14,700 support here. If it does lose it, I would be looking for a further move down to around 14,500 to 14,550 or so. Below there, of course, then we are looking for moves down to around 14.4 to 14.3 and possibly even down there to 14.2, which is, a pretty big move down, quite honestly. Now, I will say that 129, that pivot is much further than the oscillator would have you believe here for Stoke. So this is still really aggressive downside in terms of its look on the 1-day chart here. Of course, the 12-hour is also in that same area. 8 hours starting to get down there as well. So we're seeing 15,130 as the pivot there. Bull hopiums for a low being set on the 6 and 4 hour here. 14.9, and that is not going to be in the cards before the end of today, if I had to guess. We could start to see the etchings of a 1-hour bounce, but unless there's an aggressive bounce on Monday, Tuesday, this is likely to head down and test a little bit further into some of those lows that we just spoke about. The 3-hour setting up, 2 hours turned, hourly is probably turned. So, that's going to be the bull hopium, but this is a latent turn that's probably going to turn back down here. So in this case, impulse through the lower second and third comes back down. I would be looking, on any loss of that 14,700 area to come down to well, the lower second here is, coming right into those areas that we had just spoken about at that 14.5, 14.6 area. So this will also continue to expand down after close today. And, looks like a little bit of a pullback. Looks like this would start to look like distribution if we see closures below this wick low that gets bought back up and finds this area as resistance and then dumps out. But, I would still give it a chance in and around that 14,200 to 500 area or so. And before calling it over, what I will say is that the monthly is going to start to be in danger coming into this next week of a pretty major lower high. And that would favor moves back down to the basis, which is all the way at 13.1. So that is the danger for traditional markets here. 13,609 is the monthly pivot to turn, but of course this is going to be running a month behind. I would expect that to be somewhere around 14,000. So that is going to be NASDAQ. What's the weekly looking like? Ugly. I still like that slope though, until I see this does mean that there's probably time that this chops around. I mean, because this thing could still come all the way down to 13.7 at the lower second, and it's still fine. I mean, a retest of this high at 13.5 is still fine. Although closures below would not be, because that would be expansion to the downside. But I would be looking generally for a bit of a reversal there, even if it was a bearish bounce. In this case, yeah, ugly. 15,350. Traditional markets can move in pretty big ways on gap ups and downs. So we'll see what happens coming into the end of the month. This weekly on SPY is the more ugly one because this is, this likely to close below 433.01. If it does, that's going to be a lower low on a close. Now, I would still say, it's got the wick high here. It can still come down to the lower first here at around 420, 425 area. It can come all the way down. If it does lose this high around 425 and 427 respectively, then I would be looking generally for a move to 420 to 412, and that would be right around that lower second, which is coming in around 414, 415. So ugly, but still not as good. I mean, it's downside, but it's still not the doomsday scenario that I think a lot are screaming about right here, right now. As I do think that if it gets to some of those areas, it's going to get some pretty important bounces, and then we come back to it and see what the outlook is. And, quite frankly, these markets ripped to the upside off the lows. So coming down a little bit, even if it's a lower high in the monthly, I would still be generally favoring higher lows from the monthly, even if we do lock in a lower high on many of these. Now, the daily trading below the lower second standard deviation, it did dip down to our 430 target, so that is target hit. It swung this low over here. It dipped below the support resistance zone as well. And, I would still be favoring a few more tests down here. If it does close below this low at, the 430, I would be looking for a move down to that 429 to 428. And then that 425 to 420 area. There is a little bit of a gap down here as well around that 421, 422. So that's generally what I'd be looking for. There is this high over here as well. Almost got tested at 429.50. And, this, of course, would look like a bit of distribution is starting to paint that picture. Still needs to close below this low, but even if it did, you could end up seeing something like a Wyckoff pattern playing out. So be aware of that. Momentum isn't there yet in terms of setup, but we'll see what this looks like coming into next week. 440 is going to be the pivot this is going to come down pretty dramatically, especially because of the gap down. But with this kind of a, let's try that again. With what's going on? Why can I not draw on this chart up here? Okay. Well, with BBWP lifting off like this, that is generally something broke with TradingView here. Generally is still going to favor downside. So getting expansion like this. Whether or not it remains aggressive expansion will remain to be seen. We have seen SPY really just topping out for realistically all of 2023 right around this 50 read of BBWP. So I will let you know that would still mean downside if we did see continuation past the 50% there of BBWP, then we're looking at a much bigger move down. But if this just continues to tick down and then bounces back up and volatility starts to cool down, we would see that on any closures above the lower second standard deviation. Now, what I will tell you is there is a bit of a tip here for you. Because we are going to see expansion of the lower second standard deviation on open, not close, it's likely going to be right around wherever this candle closes because we are getting a doji here. And I would expect the same for NASDAQ as well. And that's going to be, yeah, it's already right on it. So I would expect the lower second to expand down, maybe even past price. And that's where the possibilities for a bounce at the very minimum and possible try for a low would be born. And that would be on, this is going to likely be right around where this closes. I mean, it's already closing basically right on that lower second. It's about 10 points away, 34,144. Trading at a little like 10 to 15 bucks under it. But anyway, this is going to be in conjunction with the outlook on Dixie here. And I mentioned I expected this area up here to get ran, and it now has gotten run. So the mid 105 to deeper 105 area, and now we can see that the upper second standard deviation for Dixie is pulling in that 106 area. So if this does get continuation up starting next week, on Sunday when it opens, I'd be looking for a move somewhere around the 106 area, 105.88 to 106, maybe even beyond. I will say that it's lining up for either a continuation move next week or a reversal. That's I wouldn't be looking for it until, of course, we see closures above that overhead resistance for continuation. But even then, this could easily turn into a swing of that area and then another drive of bearish divergence. That remains to be seen, obviously. But closures today below 105.71 will turn Stoke to the downside. That means nothing at the moment until we see a high put in. And any high that's going to be put in realistically from this look, like a Monday candle would have to close below this close here at 105.38. That would look a little bit more like a high is being put in, but realistically we got to see closures below 105.10. That's where I would say, yep, bear div's going to lock in. Then we've got our 3 drives of bearish divergence that I had mentioned that I like to look for. Here's the danger for anyone bullish on risk on assets or traditional markets in general right now. Above this RSI number right here, which is 71, that is at 105.90. Any closures above there, and this avoids in-trend bearish divergence. Just wanted to put that out there. So that would be continuation, and that's what that would look like. But if it fails to get through here and or it swings this area around the 105.80 to 106 area, low 106s, and then comes right back in, that's likely where we see a high put in and then there's a wider pullback. That would be generally good for traditional markets and might coincide with a nice bounce. Doesn't necessarily mean it'd be a reversal, or any structure change, but at least a nice bounce. Now, the 2-day is also getting pretty close on Dixie. 2 days, 105.67. It is trading below that. The 2-day is closing today. From the RSI perspective, this is still very strong. No in-trend bearish divergence just yet. I mean, there could be an argument made if there's a high put in that there's a little bit of bearish divergence here. Not really interested in that. If there's a high, it's more like, a little bit of in-trend bearish divergence and then a little bit of if it doesn't break out and close above that 105.88, then it would also be hidden bearish divergence on top of the local slight bit of regular bearish divergence and a Stoke cross to the downside. So this still has, a little under 4 hours to go. So the momentum pivot for the 2-day is going to be 105.67. The 3-day is going to be 105.50, and it's currently trading at 105.56. So the 3-day is not closing anytime soon. We will have plenty of time to revisit this next week. But, being above the upper first, very strong, good trend, very nice trend to the upside, nice breakout. And realistically, I would still be bullish on this when it does put in a high. So I would be looking for, from the 3-day chart in particular, we can come down here and get the path tool. I'd be looking for something like, maybe an upper second and then come down here around the basis and then try higher if it's going to be bullish. Now, that is really predicated on, the 4-day being, pressure up, upper second standard deviation still continuing to the upside here. No in-trend bearish divergence. There is, likely to be, on the 4-day. Okay, this is going to be pretty interesting here. This 4-day closes at 105.65. When the 4-day closes, we'll come back to this. It's got some time to close. So next week we'll take a look at this. But if it closes anywhere above here, it avoids hidden bearish divergence. So would still look very strong to the upside. The 5-day has already locked in a close above there. So it's already avoided that bearish divergence drive that could have come from this February high. And that would generally be, I'd be looking for any pullbacks from here to get picked up, and then it starts to change structure and head to the upside. Weekly, same deal. 104.01 is the pivot. It's pretty far away from there. Weekly did close above, so 105.33. This high was 105.26, so it avoided bearish divergence as well, hidden bearish divergence in this case. And that is going to then bring into play the next big area of bearish divergence, which is 113.29. So if we were to just kind of spec that out, what would it look like in terms of price? Let's go here. This is at an RSI read of 74. So 74. What would a 75 read be in terms of price? Well, a 75 read would be, to avoid that bear div, it would need to get to around 110. To avoid the bear div above it at 79. So this is how we can track if it's going to get to new highs. To avoid a bear div, it would need to get above 79, so we call it 80. So that's our normal zone anyway. And that would be, oh no, what is this? I misspoke. This is going to be, so this is 77. So 75 and 77. So 75 and 77. So realistically, 77 would take out both. So that'd be around 110. So I misread those. So 75 for the closest one is going to be, okay, that is 110, 110. And then 77 is 111.30. And then the actual high up here is at 81 It would need to get above to not create a bear div. And that would be at 114.36. So what I'm looking for here, and the reason why I'm going through this is because where the highs are is going to be the important part. So 114.36 on a close would be a higher high. So a higher high, and it would avoid bearish divergence. You're going to get a lot of people calling the wick bearish divergence, but it's likely if it's getting up around those highs, it's going to run higher than that into the 115 area and beyond, even if it's just on a wick basis. Is that the first thing I'm looking for? No, not necessarily, but I will tell you that if the monthly turns, it's not going to look good for risk on assets. So, all right. I think we got a pretty good handle on Dixie. Above 105, 106, it's probably going to get continuation. Otherwise, it's looking at it. It's on the clock now for the potential to put in a high. If it does not push through there in the next, I would say the next two closures, 2 to 3 closures, I would say. And then we'll come back to it. And that's going to be Dixie. Let's go ahead and look at gold. How's gold holding up in this environment right now? Gold's, lower heights in a consolidation. Came back down, tapped on that lower first, which we had already talked about. Didn't see any closes below that 1915. It actually closed right at 1919. Got a little bounce. It's finding resistance at the basis around 1925. If it can chop its way back above the upper first here at 1935, that would, of course, especially on a close, be a higher high on a close at 1933, but it still needs to get above that upper second. And this last wick high at 1947, 1948. And then it can go test 1952.95 and see if it can get expansion to the upside. Otherwise, if we do see continuation below that 1915 lower first standard deviation, I would be looking for a run to this close open at around 1908, to the lower second at around 1906, and that wick low at 1901. Below there, I'm looking for a run back to the lows at 1900, 1890, and so on and so forth. So Stoke 1917 is the pivot. That's going to chase price action pretty close today. So when this closes, we'll take a look at this on Monday after the open on Sunday. The 2-day is still up above 1914. Of course, this is closing today, and we'll update that momentum pivot probably right on top of price action. So probably around the 1920 area, if I had to guess. Being above the basis is a good thing. It is chopping around, trying to reverse the trend. So it's actually a really easy play, to be honest with you. Trade back below this low. At that 1901, it's running the lows and probably even lower if it doesn't bounce that lower second at that 1890 or so. Above this last wick high, but realistically, you got to take that upper second at around 1952, 1953 area, and then we're looking for a nice breakout to the upside from this consolidation. So it's either going to be continuation or trend reversal after this little bit of sideways consolidation. The 3-day is headed down on any closures below 1918, currently trading above, so it did get that initial cross down. Not too worried about that one just yet. We'll have plenty of confirmation on the daily 2-day before anything there. The 4-day is still going to be headed up above, or well, it's going to cross down on any closures below 1930s, and it has 4 days and 3 hours to get back above that momentum pivot. But right now, not looking that great. 1891, the 5-day might be the savior, and of course, this weekly might also be the savior there at 1891. But if the daily breaks down, it's going to probably go test those areas, around 1900 to that pivot at 1891. So keep that in mind. Everything looks like it's on fire right now. It is everybody's rolling for the next quarter. And there was the quad witching and all that other stuff. So major expirations, plus we've got positioning for the fourth quarter of the year. I'm not too concerned about this unless we see things actually break and then get continuation once they break. And so far we haven't seen any of that on anything. just yet. And I suspect that we're going to get some resolution coming into October. So we're close. We're getting close. Let's go ahead and take a look at Bitcoin again. And I will go over into the chats here and get rid of some of the access lines here. TradingView, for whatever reason, is not handling clicks and movements very well right now. So I'm not really sure what's going on. Let's go to the 30-second chart. Real degen here. And we'll maybe kick on some tunes here again. And they seemed really loud to me, so I'm going to I'm going to keep it a little bit lower and then take a look at chats here. So let's see. All right, so let's go ahead and jump in the chats and take a look here. So you guys are probably getting ready to bounce out of there over at the shop. Yeah, most guys left for the day already. You already wrapped things up. Not even waiting for market close. No post market today. Okay, you do have some guys that will be there for post market. Okay, cool. Any questions or just Series 2457 questions? Okay, no real questions. Yeah, you guys already we already talked about this stuff all morning. All right, cool. So let me look over in YouTube, see if anybody's chatting over there. Let me get into YouTube and take a look. All right, so hello Jedi, Bobby, Don. Hello Don, good to see you, buddy. Bobby, I already said your name. Cheryl's here. Hello Cheryl. And I think there's a few others in here as well that aren't speaking. Yes, there's actually quite a few that aren't speaking. For anybody in the chats, if you can go ahead and hit like for me, that'd be great. Let's go ahead and read through here. Let's listen to into what this guy has to say. Okay. All the news that's happening here. Oh yeah, all the crypto stuff that's going on in Europe or in the UK with Bybit pulling out. Yeah, they still have Apex Exchange, so just keep in mind Apex is Bybit's DEX. Basically, they're the liquidity provider for that DEX, and it's USDC pairs, and there's you know, all the majors are there, so just make sure you have, I would use you know, ARB or Polygon Ethereum network, layer 2s on Ethereum. So let's take a look here. What Stoke indicator does Landy use? Oh, come on, Cheryl. I've said it a million times. It's the BA reverse Stoke panel. It's BA reverse Stoke panel by trader Hali or Halali. I don't know how to say that. I know I zipped right through it. Thank you for answering that for her, Jedi. All right. Talking about premium. You're talking about premium from TradingView, Bobby? Okay. Cheryl said I found it. You never need indicators. You want indicators. Just so you know, I'm reading through them, catching up though. I built in a lot of indicators. You know, you get a full set of bands, Stoke, BBWP into the Landy bands. So you get a bunch built in. There's even a, let me go over and show you. I mean, it's free for anybody that ever wants it. It's always in the link in the description. There's also if you're into it, you can use and adjust the super trend. So there is a super trend built in here as well. So we can even flip this over, turn off the Bollinger Bands and turn on some moving averages as well. So bounce off the 200 on the 30-second. Let's see. All right. So let's see. Bobby asks, he's asking about silver and the shittiest of shit coins on Ethereum. So what are you looking for, BLZ? Yeah, we can look at silver. Let's go ahead and get the bands back up, get prepped, turn off the super trend. Maybe we'll leave it on, who cares? Let's go to the daily. Let's look at silver first. Helps if I actually click on commodities because it is a commodity. Silver looks good. Silver looks good on this particular low that it's at. It's in a a pretty wide consolidation here though. It's just kind of really bouncing from around $25 to the lows of 22. As it stands right now, bounce off the lower second after hitting the upper second. It's just running from one side to another until we see closures above or below. That's where we're looking for expansion. So that's not what I want. Let's see, arrow. Yeah, so I mean, the upper bound, it's kind of telling you right here, this low over here is where the super trend is at around $24, just under $24 to $24.10 by the upper first. That's the main overhead resistance. If it is going to head up there, it's got to get it past there, and then any trade above 24.35 likely tests that upper second in the deeper $24,000 area around that high, just around $25. Any kind of moves back down below this basis if it doesn't close here, and that lower first at around 22.87. Just keep an eye on that wick low at 22.81. If it drops that, it's going to be right back to the lower second at 22.25 or so. Pretty easy. Silver has been a pretty easy trade, to be quite honest. It is trading, generally up and to the right on the longer term time frames. It's in a wider consolidation. It's going to be bullish above that 22.67. It's currently trading at 23.54 on the daily. So looks fine to try a little bit higher. And if it's going to try higher, I suspect gold's going to hold and try a little higher as well. The 2 days going to turn on any close above 23.04. Currently trading at 23.54. So it's even ready to get a little bit of a signal here above the moving average and the basis, or the 50%. I call it the basis on the RSI. But the moving average there at 23.46. And the 50 read, or the scale midline, is at 23.50. So closing above there, generally positive by the end of today and the 2 day as well. Did it get any bullish divergences? Technically there is another drive of bullish divergence that it can lock in here. It has already locked in. Realistically, it's just not being tracked. But yeah, that's set in the low already. So there's there is 2 drives of bullish divergence there. Generally, I would say on the 2 day, I would look to this last high area and or the bullish control zone. That's at 25.17. I think that's a little bit more on the extreme upper end of what it's going to try to do. And that's because that's really only going to be if it can close and or wick above that upper second standard deviation, which is still going to, compress as it trades right around the basis band of the Bollinger Bands. So I wouldn't be looking for like the same thing that I'm looking for in gold, for instance. Now there's a lot of overhead resistance right here in this area that it's trading around. So this is going to be the key area. If it can break above here and really start to move up to the $24 area, then I would be looking for maybe a little bit more of a run. What does the weekly look like though? The weekly looks good. I mean, 22.75. The weekly is going to turn. It looks all right. This isn't too far off what we're seeing for gold either. So, a lot of doomers right now on gold, just so you know. It's kind of weird because you have people talking about gold like going like $4,000 and $5,000, and then you've got people talking about it going back down to like $1,500 to $1,200. It's like, okay, like when? Tomorrow? like nobody. It's all these really hot takes for extremely long time frames. Whereas, I literally do a video just about every day in 60 seconds to give you my targets from the closest targets to the more extreme targets, should there be, major breakdowns or breakouts. Because some of those longer term targets, it's going to take a long time to get there, even if it's on the table, right? And a lot can happen between now and then. So, but yeah, silver looks pretty good. As for BLZ, Bluezell, right? And you're doing the Binance USDT perps, I believe. Yeah. Nice mean reversion on the daily to the upper first. It's trying to hold on to that area. I traded this on the way up. I'm going to admit it. I have a short position on this right now. It went right to the areas, by the way, that we talked about on the high side here, in and around this 22 to 23 or whatever. And it was getting really, really overheated up here. So the short-term time frames were definitely pointed down to some of those areas. Let's see, 1964 is the momentum pivot, currently trading at 17.84 cents. So this is also a bearish divergence as well. It's not tracking it, but this is another bear drive. But it's got such an aggressive upside slope that I would expect it to try to hang on the highs. If anything, if everything starts to really move down, I'd look back to, around the 15.5 area to lower 15 cent area, right around the basis. If we did see it take out this last low on a close at 15, what is this? 15, no, it's 14.87, so 14.876. So below there, and especially the wick low at 14.551, so 14.5, low 14.5 basically. Then I'd be looking for it to run back down to the lower first, somewhere around the upper 12 to 13 cent area. But as long as it's above the upper first, quite honestly, this thing is just gonna chug along. It's only just now looking at getting across on the 2-day. Yes, there is bearish divergence, so it's caution. I wouldn't be like sitting on any longer term trades to the upside or anything with this kind of a look on it. But 17.5 cents, it's trading above there on the 3-day. The 4-day is going to be up above 18.38, so it's going to get a turn on that 4-day at next close, but that's going to be a little while. 5-day below 16 cents, so it's still pressure up above 16 cents. So I mean, 15.5, below 15.5 is where this thing starts to really mean revert hard. Weekly still up above 16.5, so below 15.5, which is, kind of where I'd be looking for this to really start to mean revert hard. But I mean, this 4 hours already coming off the lower second and trying to line up for a momentum shift above a breakout area. So pulling back from that previous high is right around where I went short. A lot of volume came in, if I remember correctly, around there. I was basing it on the volume that was coming in. It came right down to this guy here, this wick that is now defining the super trend at the lower second. If this thing turns around, it's probably gonna run the highs and higher, to be quite honest. I mean, it moves fast when it gets rolling, so I can't count it out. Now, what's the hourly doing though? Is the hourly flip-flopping? Yeah, the hourly's flip-flopping, but it's already pointed back up. 17.5 cents. And this thing's likely to close with another nice cross to the upside. Coming off that, my absolute favorite setup. Now, because it's a crap coin, it impulses down, came down to the lower second, and then just when it did move back up, it compressed so quickly that it came right up to that upper first. And that's where, if you took any kind of a long trade on those wicks in the lower term time frames, you should have got out. And then it gave a nice drive back down. So I mean, this is a downtrend. Right now, it's got to break this wick high at 18.5. I would almost say that if it doesn't, and it just taps this upper first again, and or just runs it by the upper second by the time it gets there, then it's likely to reject, and then you're looking for higher lows. And a possible trend change, because maybe the 6 hours start turning or something with it. As it stands right now, that hourly's got a chance. The 30 minutes got upside still. It's more going to be on this 15 minute to 30 minute. That's where I'm saying, like, you either want to look for a run of those lows again, or the hourly to put in a higher low. As this is aggressive. It's an aggressive downtrend. So lower lows, lower highs. Just put in a high. It'll start on the 15 minute, obviously, so anywhere around the lower second to lower first, if it can hold there. If not, it's probably going to keep heading down, and then that's going to kind of pull in some of those higher term time frame pivots that I was talking about. So that is going to do it for my analysis on that. I do want to check, actually, the volume signature here. Let's go ahead and turn off the bands. And oh, he's running behind. I would say the highest volume low here is fair game until we start seeing higher lows, and at least a trend change on this. So I would mark this higher volume low here. Maybe I should use the tip that I just told you guys about earlier. So that's going to be 16.8 cents or so. So it could easily work its way down there. That's a pretty high volume low. The highs weren't put in on as high as volume as they were on Femex. So, or no, was it Femex or KuCoin? Where was I trading this? I was trading it somewhere. They put in like really high volume on this high area up here. Now I will say, yeah, they tried to hold price up here after this was lost. Then it was downtrend. Really, the breakdown was kind of being defined by this area up here. Yeah, so I don't really have an opinion. This thing can move pretty quick. But downside below 1688, and I would be looking to 16 and a half, which is some of the higher term time frame pivots, and then below the 16, and then you got to watch out for that 15 and a half, because below there I think this thing's going to mean revert pretty darn hard, and that's probably in conjunction with the rest of the market. Who knows? If it can hold up above 1688, then it's got a chance. Might even have a chance here locally. So that's my take on this particular S coin. I mean, this is such an aggressive move up. But in the context of, well, this is a S coin. So, yeah. I mean, technically, it's a downtrend break, so you got that going for you if you're in this for the long term, but I wouldn't trust it. BLZ trades on KuCoin. I'm looking at the crypto bubbles. I think it trades other places. I want to say it trades FEMX too. I'm not going to bring it up here though, obviously, because I'm live streaming. So. Yeah. Cool. Well, I think, is that going to do it for us here today? Or does anybody else have any questions, suggestions, comments? Hello, Roca. Yeah, Bobby's playing catch up, man. He must have he saw you talking about silver. Oh, silver looks good. I mean, silver looks fine. I'm not expecting like a big breakdown in silver. That would be pretty unexpected if it did. It's been pretty stable, above 24 bucks. Then deeper 24s, $25. Test that last high. See if it can get above. If it gets above, then probably take off time for a little bit into the deeper half of the $20 range. ETH. Who wants ETH? Someone wants ETH? Did he ask for ETH? Or was he just referring to ETH as the king of the S coins? I'm trying to keep the swears down because I noticed that when I do swear, like my reach metric goes way down. Let's see here. Yeah, I can look at ETH too, I guess. ETH probably looks like crap, to be honest. Let me see. Let's go ahead and look at ETH real quick here. And then I got another request here, I believe. I'm going to have to read it. Let's go ahead and look at ETH on Coinbase. Well, that's ugly. There's that long-term trend line from the low, right? From the lows. If it's going to hold up, it's got to close above where it's at now, basically above its open. Let's go ahead and look at the daily. I'm not really that concerned about trend lines, to be quite honest. I put them on here because they were requested, and I don't really chart ETH that often outside of the exchanges. This is low volume. We haven't seen high volume reversal areas just yet come in, so you know, it's bouncing off that lower second. It's in a tight range. I'm not enamored with the downside or the upside right now for ETH. Unless we see for downside, if we do see closures below the lower second, which is right now at 1574. If we do see closures below there that can then close below this last wick low at 1567, then I'd be looking for a move down to 1550 and 1530 respectively. If that area is dropped, then we're looking for a nice drawdown to retest some of these prior lows down here around really around 1500 to 1490 or so, and then 1450 to 1430 or so. I think it's the wick low here is at 1369. Nice. But I would still be looking north of 14 for a little bit unless things just crashed. really aggressively to the downside. I mean, ETH looks kind of bad, especially we looked at ETH BTC, and that's so ugly right now. You know, it's pressure down with a bearish continuation drive, so it's either going to hold that lower second, or it's going to ride it on the way down or impulse through it. If it holds it, it'll give it a chance to reverse and try to put in a low above today's wick high. That's where that would happen, and a regain of the the lower first standard deviation at 1602. Other than that, not but I do still favor further downside. I mean, this was basically a little daily double top up here, lost the low, set that in as a high, and then you know, it looks like it wants to retest the lows around 15.5 or so, maybe lower. That's kind of where I'm at in that regard. You know, its saving grace could end up being the 4-hour if Bitcoin can bounce aggressively, you know, back above 27 or something, 26.9 to go test 27.2 again. It might have a chance, but you know, below, I mean, it's below 1650 basically. It's not an even, it's even higher than that, because it's got to break out above this wick. It's got to clear this area above 1670, and that's pretty far away right now. So I'm bearish below there until we see a lower high, which, you know, this might become if it continues down to test that lower second again at like 1569. Nice. If it does that, then I would be looking, you know, back to the 1602, which is, you know, that wick high of today. If it can get above there, then we've got a little bit of a structure change on like the 4-hour, and then I'd be favoring a move a little bit further north. You know, maybe 1620 area, if I can get there around the just north of the basis, near that trend line. This little order block zone up here, 1620 to 1625, and then see what happens. That is if it can bounce from here. Otherwise, it looks like continuation down. And the more concerning part is for spot volume coming in. It's basically doing pretty poorly. That's what I'm trying to say. Like, for volume coming in to set a low, it's doing, you know, we had continuation volume. That's all we've seen so far. So, you know, same for Bitcoin. It's last low, kind of defining high volume breakdown. So when we saw that candle break down, boom, 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 we get the lower lows. And, you know, for right now, there is a few different spots of volume on spot that are interesting. So there's this area that was just swung, right? No close below this higher volume wick low, and that bounced it. But if it loses it, you know, then we're looking to the next higher volume area, which is going to be the actual, you know, current low. So, oops. If that makes sense. So that's kind of how I would mock that up. You know, it got a nice bounce off of this low. Can it hold this area? You know, if it can, sure, great. Oh, by the way, you can even do fun stuff like with fibs. You can pull a fib on the area as well and see that its wick came in at a 50%. And you're like, well, it's not the high to the low over here. No, I'm taking the volume range. And the volume range is always going to be pretty interesting to pay attention to. Because you'll often find that, you know, the fibs will often line up with those important volume areas as well. That is a non-standard way of using a fib. But you can see that wick came in basically right on the 50% of this volume area. Closes came in just south of that 618. And, swung the 888, the torque 888 up there. So, yeah, I'm not really favoring upside until we see it from the 15-minute at least. 1604 breached on the close and held. And then it's realistically this next low right here, which has not even been tested yet at that 1603. Yeah, not too much else. I mean, above there it's 1620. It's this low right here, and we already talked about that one. So this current move down is what I'd be tracking, not the previous moves. This current dump off is what's interesting, and that's, it lines up with all the areas that we were just speaking about. And fun stuff. You can even do this, and I know this is not how you typically use a fib, but you will often find that things line up in pretty interesting areas. Held the 272, held the 382, hit the 618. So it actually swung it on a close too. So that is, of course, a very non-standard way, but taking into account those big higher volume candles on the way down, it is interesting. You'll find it often lines up with fib numbers and or, 0.5 is not a Fibonacci number, but you know what I mean. And for the local move, you can see that it came right back to the 618 so far. So it's playing pretty technically. All right, I think I ran out of music. Yeah, fibs don't work. Fibs only work in non-standard ways. You got to use them in the way you choose to. Use the numbers that you want to use. But any questions, comments, suggestions? I'll give you an update. Discord server still getting there, hopefully this weekend. In fact, the weekend might be a good time to, even if it is getting close, I might actually end up launching it over a weekend anyway. So we'll see. Might be if I have enough time over the weekend, Discord server might go up. I mean, you guys are in there. Did you guys test it with the code, with the malicious code? Did it catch it? It did. Okay, cool. So that's one problem fixed. Now there's just a few others. Cool. Well, I think that's then going to do it for me today. I hope you all have a wonderful weekend. I will try to have a wonderful weekend myself. And you, of course, have a good morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And, of course, as always, stay safe. And with all of that being said, Landy out. Thanks for hanging out, guys. And gals.